Good afternoon, traders. It's Jefferson Fossey here at Walsh Trading. Happy Wednesday, everyone. It is October 1st. It's a couple ticks after 3:15 here in the afternoon. This is my midweek commodity outlook. I'm going to take a longer look, very similar to what I do in my 5 minutes on the market here every morning, but this is going to be a little bit longer deep dive. Looking at more markets and perhaps spending a little bit more time on each chart than I would normally have time for, excuse me, here in the mornings. Please keep in mind futures trading does involve substantial amounts of risk, certainly not suitable for all investors, traders, or producers. Let's start off here. We're looking at December live cattle here. These cattle today finished down 27, 234 half is where they closed. February was unchanged here, 237.17. Now my charts flipped over to the sell side here with yesterday's trade. What that means, the 5 and the 10-day moving averages made a little bit of a bearish crossover. Did hold 50-day moving average support here the last 1, 2, 3, 4 sessions. We didn't test it today. We didn't really test it on Monday, got close to it. Did bounce off it on Friday and did bounce off it yesterday in what I thought was a pretty nice technical recovery here, but they rallied him higher here today, found some resistance, not exactly a very strong close. I don't think this doesn't inspire a whole lot of confidence in me right now, thinking that the cattle market's going to go a whole lot higher. I just don't see that. This was kind of bearish here. That 50-day moving average support's still there though, 233.20 until we get a close below that. The market is still technically in an uptrend. Now you notice we've banged into this moving average a couple times here over the course of the year. Bounced nicely here in March. Went through it for a few days here in April, found support near that 100-day average, and boom, setting right back up to setting new highs. Interacted with it here over about a 5-6 day period here in late June, early July, which sparked a big rally where we saw our highs here in August. So holding right here along support. Would like to see that resistance get broken here, that little bit of a trend line that I've got drawn across the top there. That was off the highs that we had here August 27th to the highs that we had here in September. Didn't quite get there though, and we're staying at the lower end of the range. Cattle market does look a little bit heavy to me, technically speaking. Fundamentally though, we still have less people and more cattle to feed. November feeders today finished the day down $1.75, 357.60. Rallied all the way up though. We did have a high of the day, 362.77. You can see the feeders did bump into that trend line resistance, also drawn off the highs here August 27th to the highs we had here September 23rd. That is resistance here. They had a chance to run through it here today and couldn't. Bears ended up winning out on the day and pushing things back down to close on the lows. I don't think that's a bullish sign in my opinion. Yesterday was a nice bullish turnaround for feeders, but it was also turnaround Tuesday. So maybe the sell pressure is really where the market wants to be these days. Seasonally speaking, feeders generally go lower until this November contract goes off the board. They haven't done that so far this year. Usually they're in a pretty decent downtrend, but maybe that's coming here. I don't like the fact that we failed against trendline resistance. Keep in mind though, the trend is still up. We still have less cattle and more people to feed, so the fundamentals are still bullish, but the technicals are starting to roll back a little bit, not being as friendly here in my opinion. Looking over here, December lean hogs finished the day down $1.82. Every day this week has been bearish. Monday we were down 70. Tuesday down $1.62. Wednesday we're down $1.82. Each day's gotten a little bit heavier. Did not hold above the support here from those June highs, so perhaps a test of the high and low that we had here on September 18th down around that 86.52 mark, 86.50 or so, should be a decent level of support. If that doesn't hold, you got the 50-day moving average right there at 85.76, and also a little bit of a trend line that I've drawn, not necessarily off the lows, but just where there had been, looked like there was support to my eye. That trend line support here is right, today's data right around that 84.14 mark. Stochastics pointing lower, as is the MACD here down in the lower end. Volume was pretty high today for the Dees hogs. That might indicate a little bit more selling pressure ahead. closing below the 5 and 10 day moving averages here on 2 consecutive days. That's going to lead to kind of a bearish shift in the market unless they can recover things nicely. Speaking of recovering nicely here, corn today finished the day up a penny. 416.5 is where settlement prices were, but well off the lows. We did dip down here, and I know the chart's a little cluttered. I'm going to clear some of this out here in just a second. You've got the Fibonacci retracement drawn on here from the lows that we had here August 12th to the highs that we set here September 17th. They did go down and hit that 50% mark, bounced back up above the 50-day moving average. I think that's somewhat supportive. I would like to see corn finish even higher here on the day. But even with the grain stock numbers here from yesterday, kind of surprising the market put it down a little bit here, down about a half a cent, or excuse me, down 6 cents here yesterday. Hold on, let me fix that so that doesn't happen again. There we go. Sorry about that. And we closed right, so let's get that off of there. So let's remove some of the clutter there. Big spike down, finished with a green bar up, just a penny higher, but I do like the fact that corn recovered very nicely off the lows. Short-term averages are still pointing toward lower prices. The 5 and 10 day are still above the market here at 420.25 and 422.25 respectively. Stochastics starting to hook up a little bit, still very, very close to oversold. And AMACD is still pointing towards some weaker prices. That 100-day moving average, we traded along that for about 2 weeks, give or take a day or two. That's going to give us resistance here, 424.5. We'll call that 425. Got to get a close up above there. I'm not bearish corn and not bullish. I do think we can trade higher. I think the market wants to fill this gap here at 432.75. I think it's probably warranted that we might trade up to that 200-day moving average near that 439.25, 440 mark. I think it's going to be tough for the market to get over 450 though. Harvest is progressing nicely. We're a touch behind schedule here, but not excessively so, just within a percentage point of where we should be here for this time over the last 5 years. And seasonally, once we kind of made our low here in August, corn market does tend to run a little bit higher here. Soybeans, another nice recovery here. November beans here finished the day up 11.25. Very large bullish engulfment here on my chart. We broke this trend line resistance that was kind of holding over the past 5-6 days. We can get rid of that trend line here. Big bullish engulfment here today, finishing up 11.25 cents at 10.13. They did have it as low here as 9.93.75 here. So we did finish almost 20 cents or so off of the lows. That is pretty strong here. Again, would like to see them up toward the highs of the day here. That was up near 10.20. But very, very strong reversal. Could see the bean market getting ready to turn itself back higher. Moving averages are still bearish and from the 5 and the 10 day. And you've also got this big collection here of the 50, 200, and 100 day range in between 10.24.75 up to 10.29.75. That'll give us some resistance on the way up, but if they go through there quickly, expect it to trade back up toward the top end of the trading range. Stochastics pointing higher. MACD is still in bearish territory, but it's starting to hook up just a little bit. December soy meal spiked down to new contract lows here today. Got as low as 270.10. Closed here 273.60. Actually up 3 ticks here on the day. Nice recovery there. Not nearly as nice as the one in soybeans, and a big spike low. You still had lower lows, lower highs here in soy meal. I do like the bullish recovery off the contract low here. Could spark a little bit of short covering here, maybe some profit taking as the market's been trending pretty aggressively lower here for the past week and a half to 2 weeks or so, ever since we had that big down day here Wednesday, September 17th, when it failed the resistance. That was kind of the impetus to start the market lower. 50-day moving average is going to give you resistance very close to that trend line that I've drawn across those significant highs that we had here in the middle of September. That's going to be right around that 284.90. We'll call that 286 for the trend line. So right around 285 or so. Expect some resistance and be about 12 bucks, 11.5, 12 bucks higher than where we're at. And nice little rally if we can get it there. December soybean oil finishing the day up 93. Didn't have any real reaction to the grain stock report here yesterday. Finishing down just 20 cents on the day. 49.49 is where we closed. Today's settlement back up above 50 cents even. 50.42. This market's kind of been trading in a bit of a trading channel here for the last 2 months or so, give or take a little bit. Low end of that here is kind of roughly coincides with the 200-day moving average, right around that 48.52. The higher end of the range is up on that 54.03 mark. Not quite a bullish turn yet. Short-term averages are still on the sell side, but we closed above both the 5 and the 10-day, so that could also spark a little bit more buying interest. Stochastics hooking up out of oversold territory, starting to point higher. MACD has been improving here the last 4 or 5 days here as well. Bean oil looks as if it might want to go higher. Had that spike low here last Tuesday, a week ago Tuesday. Haven't violated that at all. Been holding support. Now you get a nice push higher. That could spark more buying interest back up toward the top end of that range. Chicago wheat here today. Spike low, new contract low, getting down to 5.02 even. Closing at 5.09 and a quarter. Up a penny and a quarter here on the day. Nice bullish recovery there. Would have liked to see more to the upside here from that. Good volume here today, almost equal to volume from yesterday. So perhaps the wheat market making a spike low. Overarching trend is still down. Short-term averages 5 and 10-day flipped to the bearish side here last Tuesday. A week ago Tuesday, not yesterday. They're offering some resistance here, 5.16, 3/4, 5.18. And that 50-day, we haven't tested that or interacted with it here since July 22nd, 23rd, give or take. You know, those 2 days right there, that's been pretty hard resistance. If we can get close back above that, perhaps the wheat market can turn. I do like this. Got to start with a single step, and that was a pretty good step there for today. KC wheat here down 2 1/4 on the day, also a spike low, also a new contract low. Got down to what, 4.88 even. Don't like this under $5. That's gonna, that big fat round $5 number is going to become psychological resistance, I think, at least in my opinion it will. 5 and 10-day moving averages are still pointing toward lower prices. Those flipped to the sell side here also last Tuesday. Do like the recovery here if they can stack onto this here. And that can help put in a short-term bottom perhaps in the wheat market. Been advocating recently here for this Chicago KC spread, buying KC and selling Chicago wheat. Been holding right along trendline support here for about the last 10 days, 2 weeks, give or take a little bit. That trend line support is right here. I would have that at minus 14 cents. We'll call it minus 14.5 on the spread. Closed at minus 13.75. I still think this is worth examining here from the long side, in my opinion. Usually KC wheat tends to react a little bit faster and rally a little bit faster than Chicago wheat can. I wouldn't risk too much more on this trade. I think your risk on this, if you put them on here in this range, if we're watching for trend, make sure they don't close below that 17-cent level, minus 17 cents. If they get back down there, back to that September 2nd low, may want to not be in that spread anymore. Flipping over to the soft markets, December cotton, another nice recovery here. I had a little bit of an update here yesterday from the quarterly stock report, but overarching trend 5-10 days still. 5 days still giving us good resistance here. Bumped into it here a little bit yesterday. Couldn't break through it. Bumped into it here a little bit today. Today that number's right, 65.91. Today's high, 65.90. Got right up to it. Couldn't push through it. I do like the fact that the cotton market spiked way lower. Getting all the way down to what, 64.70, and the market kind of rejected that. You saw some decent buying interest. When I get bullish cotton here just yet? No, probably not. Market's still in an overall downtrend, but could see a reaction here, much like the spike low that we had here in August. Market made a similar, that day was green, this day was red, but made a similar spike low, closing up near the highs of the day, and then rallied very sharply here for the next 2 sessions here before we got up, found some resistance above that 100-day average. So I would expect cotton prices to probably bounce here throughout the rest of the week, bounce higher that is. Stochastics hooking up out of oversold territory. MACD still pointing lower, but we'll see if they can add to this reasonable game. It was still down 16 on the day, but nice little pushback higher here off of that spike low for cotton. Looking at March sugar here, down 45 on the day. My moving averages flipped to the buy side here with Monday's trade. That's when the 5 and 10 day made a little bit of a bullish crossover. Was trending higher here. Nice new highs here, higher highs, higher lows on Tuesday. Today got hit by a big wave of bearish selling. Closed below that 10-day moving average, finishing at 16.15, down 45 here on the day. I don't particularly like that from the buy side here at the moment. Seasonally, sugar does tend to make a little bit of a rally here and a little bit of a low this time of year. Usually trends higher for the next month or so. We'll see if that happens here this year. But big bearish trade here today might negate that. Stochastics were pointing higher here, and they turned and hooked abruptly lower here with today's trade. MACD still in positive territory. See if they can recover from these losses here. I mean, this put us down, to levels we haven't closed that low here since, well, a week ago. Wednesday, September 24th. Flipping over to the coffee market here, 965 higher today, 384 half is where that settled. Short-term averages flipped back to the bullish side here. Yesterday's trade, stochastics pointing higher here as well. Big bullish day up here. Highest close we've had in this market. Well, I got to go back to the day we set that high here, September 16th. Every day since then, we've been closing lower than this particular level that we're at. Finishing 384.50. The 5 days giving you support here. Let's see where. Well, the 10 days at 371.36. 5 days up here at 376.19. I think those are giving you some support here, and I do like the fact that the bullish moving averages crossed over here yesterday. Long-term averages, the 50, which is the green, pointing higher. The 200 is inclined higher. 100 days kind of flat. But the 50 crossing over the 100, I think that's kind of a bullish sign. They did that here last Tuesday. I think this sell-off that we had over 5-6 days here after that big high was just profit taken. I like coffee from the long side. I think that market wants to go higher from here. Looking over at December cocoa, down 59 here on the day. This is the lowest close in cocoa. Got it all the way back to, well, just before right around Thanksgiving last year. Friday after Thanksgiving was the last time we closed at these levels. Does not look very strong here at the moment. Cocoa market just keeps leeching its way lower here. The way it's been trading, I would expect this trend line here that I've got drawn on the chart to be a reasonable target. That's down around that 62.50 area. Closed at 66.90 today, down 59 here on the day. 5-10-day moving averages are in bearish territory. They flipped that way here Thursday, September 18th. Market's been working its way lower since then. 50-day moving average gave us some resistance here in the middle of the month, but I don't think we're in any danger of testing that anytime soon. 100 days way up there, and the 200s even further up there at 81.71. Cocoa market looks bearish to my eye. Christmas gold, December gold. Now this market's still open, doesn't stop trading here for another 25 minutes or so, about 4 o'clock Central Time. New contract highs in gold today, 3,922.70 an ounce. Getting a little bit of profit taking, pulling the market back just a little bit off those highs. We're still up $18 or so here at the moment. 38.91.90 is the last I show. Even if the market starts to pull back a little bit, I don't think I get bearish just yet. 5 and 10-day moving averages have been on the bullish side here since, well, August 25th. They're not really showing any signs of slowing down here a little bit. Down days that we've had recently, like last Wednesday, a couple down days here. Wednesday, Thursday, the week before. It seems like every time we get a red day or a down day, it's just a buying opportunity here in gold. Market remains strong. The uptrend remains very, very strong. I think if we do get dips in gold, you look to approach that from the buy side at this time rather than the sell side. Market is very overbought. Stochastics are up at 91 and 88 respectively, and they've been that way, well, pretty much since the end of August. Market seems content to stay that way, and the trend is strong. MACD is pointing toward higher prices here as well. December silver, 75 cents higher here at the moment, also making a new high here, getting up to 47.97. I think the upside target initially is going to be that $50 level. Nice big fat round even number, maybe a good place to take profits. If it were to trade up there and you've been long this market, much like gold, 5 and 10 day moving averages have been on the buy side of this market or in bullish territory here since August 25th. Every time we've gotten a dip down here recently over the past month and a half, we trade lower for a day, it's a buying opportunity. We trade lower for 2 days here in the middle of September, it's a buying opportunity. You're making new highs 3 days after the selling pressure subsides. Still like this market from the long side. A little bit of profit taken here. Markets are getting towards some lofty high levels here, both gold and silver. But for the moment, I think the uptrends continue there. Looking at December copper, up a little over 3 cents here on the day. 488.95 is the last I show. 5-day moving average, 10-day moving average is held as support here this week. We bounced off the 5-day here on Monday, again on Tuesday, and again here today. Now that 100-day is offering some pretty heavy resistance. We ran into that level last Thursday. If we can get a close up above that, I think the copper market wants to go higher, especially if we can start to bring back some manufacturing, get that back on track. Got to remember, copper, I think, goes into just about everything that we have manufactured these days, from cell phones to washing machines and almost every appliance in between. Should be good demand for the copper market. I think this big I know that this big sell-off that we had here in the middle of, or at the end of July, the last 2 days in July, was due to the tariffs being pulled off. I think the market's been trending higher here ever since. It's had a nice little uptrend to it. That trend line support I've got in copper is at 462-ish. We can close above this 100-day moving average sometime in the next few days. I think copper market prices want to continue to go up. U.S. dollar index has been very quiet. Not really much of a range or not much of a direction to it. We've kind of been stuck in the same range here since the middle of June, if not even further back. Closing today here, down just a nickel is the last trade I show. Just doesn't seem to have a whole lot of direction to it. Gets a little bit lower, goes back up to the upper end of the range. Now maybe we're on the downside of that. Look for the market to trade back down. I just don't see any real direction here in the dollar index at the time. 30-year bonds, 117.01 is the last I show. Those don't stop trading here until 4 o'clock Central Time as well. Now on my charts, the 5-10-day did flip to the buy side here, bullish territory with today's trade. Put that on my 5-minute update here this morning. Higher highs, but you also had lower lows here. But the market seems to want to be trending higher. We've been holding up above those highs. This red horizontal dashed line is against those highs here early in August from the 5th. We got down to those levels here last Thursday. The market's been working its way up. There is a Fed meeting here again at the end of the month. Starts the 28th, ends on the 29th. That's the next interest rate decision here from the Fed. At the moment, I believe most traders are expecting them to cut rates at least one more time this year. Whether it will be in October, I think it should be, but whether it will be or not, we'll have to wait and see. But for now, I do like the bond market here from the long side. 10-year notes for December up 12.5 here today, closing back up above the 5 and 10-day moving averages. They haven't quite made the turn that the bond market, the 30-year bond market did. In other words, the 5 and 10-day moving averages haven't quite made that bullish cross. Stochastics pointing toward higher prices and the MACDs hooking up. Commentary for this is going to be very similar to what I said for the bond market. I think the market's trying to price in an interest rate cut. Whether or not we get one more or two more here this year, but the market seems pretty confident that we're going to get another one. 50-day moving average support has held here in the 10-year notes. We tested into that here last Thursday, Friday. Didn't quite get to it on Monday, but we bounced away from it. Now we're pushing back higher. I think the 10-year notes can work their way up. Flipping over to the stock market here. S&P 500 in the E-mini here is up 19.25 here at the moment. 5 and 10-day moving averages actually flipped to the sell side here with Monday's trade. Don't particularly like that. I think the stock market is in good shape, and I think any dips need to be bought. We're pushing up to new contract highs in the December S&P here today. It's up 19.67.57 and change here at the moment. I do like stock indexes from the long side. I think for now the market wants to go higher. I know folks seasonally that the markets tend to go lower here in September and October somewhat, but we're just not seeing that at all there. And it seems much like my commentary in the gold market. Every time there's a dip in the stock market, we should be buyers, I think. NASDAQ futures, those flipped to the sell side. The 5 and 10-day moving averages did yesterday. I would expect them probably to flip back to the buy side here relatively soon. Pretty good day up for the Nas. It's up 107 or so here at the moment, just north of 25,000 even. Did set a new low here for the week, but got some decent buying interest, pushing the market right back up. I like the stock markets from the long side. Even the Dow's only up 3 here at the moment, 4 higher, 46,693. Short-term averages in the Dow did flip to the sell side here yesterday, but like I've said in the other indexes, I think the stock markets at the moment, all the charts tell me it's in pretty good shape. So I think dips just need to be bought there. Don't see any real seasonal pressure coming here in the Dow. Russell 2000 short-term averages are also on the sell side. They flipped that way here with Monday's trade there. But decent little day up 2.3 here right now. Spike low, much like we had here yesterday. Yesterday we finished up 470 after a spike low. Today we're finishing even closer, or well, even further off today's lows than we did yesterday. I think that's relatively supportive. Anytime that you see a bar like yesterday or today, when you've got a spike down, but we're closing in the upper 10 to 20% of the range, somewhere in there, just shows that the bears got rejected and the market does want to go up, or at least the buyers are in charge here for the present time. And we'll finish up with the energy markets here today. Crude oil's down 56 cents today. 61.81 is the last I show. Kind of broke lower here than I put a little trend line here on the just off the lows that we had here in August to the low we had, the close we had here in September 22nd. Kind of broke out of that here to the downside today. I think the September low here, what was that, 61.06? That's probably their next target here to the downside. Crude's kind of been in a choppy little trading range for the last couple of months, ever since we had those 2 huge bearish days here in June, the 23rd and 24th. You know, seems to find decent support here right around this 61.50 or so area. Gets some resistance every time it gets up north of maybe 65 up to that 66 area or so. Kind of expect that pattern to hold. OPEC Plus is allegedly going to increase production. That is a bearish influence here on energy prices. We'll see if they can maintain that. Those production hikes. Unleaded gasoline, RBOB's down about almost 3.5 cents here today, trading 188.89 here at the last. Also broke out of the trend lines that I had drawn onto the trend channel and actually pushing down below the 100-day moving average now. That's 189.53. That's going to become some resistance. Stochastics pointing toward lower prices here in the RBOB. 3 solid days down here this week. Might be heading toward those August lows that we had here. That was right around that 183.65 mark, right in there. That could be our next support target. Kind of held in that range here late in June. Certainly held in that range in August. Looks like the market wants to go test that here level again. Look for him to head back under 185 before we find significant support here in my eye. December heating oil, same thing there. We had an equilibrium day here last Friday, day where we opened and closed almost at the same price, within 8-9 ticks of each other, I believe, from the open to the close, right up at the top end of the range. Been working its way lower here ever since. Trendline support I got here in diesel prices, right around this 229 mark. We're at 230.27 right now. 50 in the 200 days are your next target to the downside, and if this market wants to go down and test those August lows, that could put us right around that 218 or so area, way down here, which was also the support level here that held late in June that we rallied away from. Diesel prices, it's only been 3 days, and we had 4 days down here a couple of weeks ago, and then the market rallied up. We'll see if that trend line support holds, but because RBOB and because is breaking below that, and because crude is broken below both of those trend lines, I think diesel prices might want to do that here as well. And finally, finishing up with the nat gas here today, 344.80 is the last I show, up 14.5 cents. Big, huge recovery here the last 3 days. Market bounced off of trend line support here Tuesday a week ago. It's kind of been working. So we've only had 2 kind of red days since then, and even those weren't, only one of those days was down, and that was last Wednesday, the red day here on Friday of last week. Still higher than where we closed on Thursday. It was red just because we closed lower than where we opened the trade. I do like the fact that this market closed up above that 50-day moving average. Might go back down and test that. Also, maybe test into those September 8th highs. That was right around that 344.40 mark. That might be a little bit of support here. We're at 345, not far away from that here at the moment. Winter is coming. Stochastics pointing toward higher prices. Very high trading volume here today. I don't know. Nat gas looks like it wants to go higher here. In the meantime, how bullish can it get? Well, you've got 50-day or 100-day moving average, giving you some resistance here at that 373 and change mark. $4 is where you got that 200-day moving average. That's almost a flat line, almost. It is slightly declining here at this point in time, but $4 is probably a reasonable upside target from here. I do appreciate you listening, folks. If you have any questions, comments, want me to cover anything in depth or any more in particular, please let me know.